things like that. How would you characterize where we are in the cyclical side of the global economy?
Thank you. And let me just say first, thank you to XP and thank you to all for allowing me to be here. It's a huge honor, and I must tell you, it's really intimidating seeing so many people. You know, we've been playing a game of ping pong when it comes to thinking of where the global economy is. And that is because there has been volatility of narrative in the United States. Let me give you an example. On July 31st, the Federal Reserve finishes its policy meeting, and everybody's calm about the economy. 2 days later, we get a jobs report that is weak, and suddenly the view is the economy is going into recession, the Fed is late, and the Fed, some people felt the Fed should cut interest rates immediately in an emergency. 10 days later, we get another data point, everything is fine. You're talking about the largest economy in the world. You're talking about the economy with the most mature institutions. It's supposed to be predictable, but it's not. And that speaks to where the cyclical situation is. Growth is slowing down, so you no longer have the growth anchor. Policy guidance is not clear, so we no longer have the policy anchor. And then there's still a lot of over-leverage in the financial markets, so you don't have the technical anchor. So we are in a period of a lot of cyclical uncertainty where opinion is going to go all over the place before it settles down.
Okay.
Yeah, that's perfect. Thank you. So I guess on the same lines that you're mentioning, so you mentioned FMOC's last meeting. So this central banks in general, I would say, they have been very erratic in their reading of inflationary pressures and dynamic. So last time we spoke, and I remember this quite vividly, you had a very heated discussion with Ben Bernanke saying that perhaps they were too focused on their spreadsheets and too little focus on businesses. And recently you also mentioned in an interview that you thought that the Fed had been too data dependent. So looking at the current scenario at the moment, what do you think are the main causes of these erratic assessments of central banks? Do you think there are any structural shifts that justify such forecasting errors?
Yeah, I mean, I'm glad that you referred back to the panel that we did with you with Chairman Bernanke, because we did disagree. We disagreed about two things, about inflation, and we disagreed about where to look for data. Central banks in the West made probably one of the biggest mistakes in history in 2021 when they characterized inflation as transitory. Transitory is a very dangerous word. When you tell somebody something is transitory, you tell them it's temporary, it's reversible, don't worry about it. And they took that view despite evidence from the companies saying our costs have gone up, we have the power to pass on those costs to higher prices. So they made a huge mistake in 2021 in taking a strategic view of the economy and getting it wrong. So they became totally data dependent. Now we know data is noisy. When the central banks become totally data dependent, they are driving a car looking at the rear view mirror, because that's what data dependency is. You look at past data. And because of that, there's been volatility in the signals that the central banks have given. Why are we here? Because of failures of policies, failures of forecasting, failures of communication. The good news is slowly central banks are recovering from this mistake, but they have become very risk averse, and that's why they are very limited in what they tell you about the future. In the speech last week by Chair Powell at Jackson Hole, he didn't say what the destination of interest rates is going to be. He didn't say what the journey is going to be. He just told us what the first step is going to be.
From that point of view, I mean, since 2008, that's a debate we've had at XP. Don't you think we've been putting too much emphasis on monetary policy? Because monetary policy seems to be the fix for all the problems, right? I mean, oh, there's a growth problem, call the central bank. And structural growth problems, growth policies should take part of the burden, right? Instead of just putting all in the hand of a central banker, right?
No, absolutely. We've over-relied on monetary policy and we haven't focused enough on structural reforms. But there's a good reason for that. Before 2008, we fell in love with private finance. The system over-levered, and then the system started trying to contract very rapidly. The only thing you could do at that point is take the central bank balance sheet and replace it for the private sector balance sheet that was contracting. Otherwise, we would have had a global depression. This was 2008 to 2010. 2010, central banks are looking to governments to now take on the burden of growth, of productivity, but governments weren't ready to do so. So central banks thought that they would step in and build the bridge. The problem is they kept on building the bridge and there was no handover. Now I think there's an understanding in the West that central banks should step back, that there's urgent need for governments to enhance productivity, to enhance growth. And the good news is that there are major transformation going on in technology, in life sciences, in sustainable energy, that if well handled, can provide for a significant increase in productivity and growth.
Well, and I guess that lies up a lot with the following question, which is about fiscal policy. So if the government is actually effectively counting on something other than monetary policy to fix the economy, to have structural differences, right? So increase productivity. A lot of the governments now are looking into government spending, so fiscal spending, something that we know a lot in Brazil. So in the US, we know that that has been growing quite rapidly in the
So it is a concern. Why is it not a crisis? Because the US is like the cleanest dirty shirt you have. I want you to imagine that you've gone on a trip, that you've packed exactly for your trip, and then suddenly your flight is canceled and you have to wear a dirty shirt. You're going to wear your cleanest dirty shirt. The US is the cleanest dirty shirt in the global economy. It still attracts most of the capital. It is better off than Europe. It is better off than Japan. And it is the reserve currency. So the US has the ability to be fiscally imprudent much longer than any other country in the world.
If we shift subjects a little bit and talk about the supply side in the economy, right? I mean, there's a lot of discussion in the US about immigration, right? And part of the growth surprise in the US is that because we basically increased the amount of labor available to the economy, right? So how worried are you that, both, stated immigration policies could damage the growth prospects?
So I think first, Artur, you're very, very right. We should spend a lot more time talking about the supply side. Because the answer to a lot of our problems, whether you're in Brazil, in the US, in Europe, is higher productivity and higher growth. There is no other answer. That is the answer. And you don't get there on the demand side. You have to do it on the supply side. And you have to have two things in mind. Think of a car. The first thing you do is you release the brakes on your existing engine. So you try to enhance your existing productivity. And then the next thing you do is you add more cylinders to your engine. So you focus on the future drivers of economic growth. The US had a huge benefit, as you say, that there was up to 2 million illegal immigrants that came in, a huge political issue, huge. It's the second most important political issue today in the US. The first is the economy, the second is immigration, the third is abortion. So this is a huge political issue. But economically, like you say, it was a positive supply shock. It allowed the economy to grow faster without inflationary pressures coming from wages. So there is concern among economists that now, with much more focus on illegal immigration, that positive supply shock is not going to be there. And that's why the other sources of growth is so important. But that goes back to Raquel's question. The US is spending a lot of money on technology and AI, on life sciences, and on sustainable energy. They are spending the most money on those three segments, and those are the future growth engines.
Well, I guess that if you take the UK case as well, there's a lot going on also on immigration there, and there has been signs already of lower productivity growth in the past years, right? Do you think it relates to that as well, to some of the immigration policies?
I mean, in the UK, Brexit has been a very big negative supply shock. And add to that the pandemic, when a lot of people went back to other European countries and now cannot come back in. And yes, the supply side on the UK has been of concern. And the new government is very focused on other engines of growth.
So if you think about staying in the technology side, right? Productivity has been, historically very difficult to forecast, right? So how should we think about this? What should be a positive supply shock, right? A dislocation of the capacity of the economy to produce, given the new technologies, but given that we know so little how much it can amount to actually.
So there's a good reason why we don't know. And all you have to do is ask the people who are at the forefront of this revolution and ask them a simple question. What will your world look like in a year's time? And they'll say, we don't know, because it's changing so quickly. There's four things that are inputs to a massive technological revolution. One is money. And there's so much money being thrown right now at AI. Two, computing power. And computing power continues to increase significantly. Three is people, expertise. And there's a lot of expertise in the US, in China, that is being attracted to that sector. And then the fourth one is energy. That's the one, because this AI requires enormous energy. But for now, these four enabling factors are on turbocharge. And therefore, the amount of changes that's happening in that sector are incredible. So we have a strong sense, that AI not just will change what we do, but will change how we do it. And productivity is about the how, is how you do things. So we have that strong sense, but as of now, we don't have a very clear specification of how much that is. But I have no doubt that this in 5 to 10 years' time can be, and in certain cases will be, a major boost to productivity.
And I guess I'll make just a jump back to inflation before we go back to productivity discussion. So a lot of these, right? So the AI revolution and all of that, these trends, they were quite strong before the pandemic. They regained some strength now, but I think at the same time, we saw other trends that grew much stronger after the pandemic, which is regionalization of production, so kind of a deglobalization of world trade, right? So we see world trade diminishing a little bit, especially in some parts of the world. So do you think that some of these inflationary forces, in the balance, right? So what do you think will be stronger in the coming years? The trends that relate to technology that actually will help decrease pressure on inflation, or the other trends like friendshoring, nearshoring, doing it at home